Hey guys, welcome back to the channel Let's Make a Mill, as well as my own personal blog, letsmakeamill.com. I'm your host, Eugen Vasquez, and today we're going to be talking about should you invest into a REIT, which is a real estate investment trust, or should you invest into a physical asset like a rental property, right? So this question has come up quite a bit. I see it a lot on the Bigger Pockets forums, and whenever I talk to people and tell them what I'm investing in, I usually get the question, well, should I invest in real estate, or should I invest into Fundrise, or should I invest into, stocks like, Avalon Bay Communities, Realty Income, things like that. So I'm going to go ahead and talk about, the pros and cons of both, and kind of putting it all together for you to make an investment strategy. And I'll kind of discuss what my investment strategy is. So let's get into it. What is a REIT? Let's talk about that. A REIT is a real estate investment trust. All right. Instead of you buying one asset, one property, you can invest into a REIT, which will invest in, hundreds, if not thousands of either houses, apartments, commercial real estate, distribution centers, warehouses, office buildings, medical centers, and just everything else real estate related, right? That is what a REIT is, versus investing into a single family home or a multifamily home where you're tied to that asset. So that's the difference between, or that's what a REIT is, and the difference between a REIT and a physical asset like a house. All right, so what are the barriers to entry? Well, if you're going to be investing into physical real estate, there is a high barrier to entry. Okay, let's take a hypothetical $100,000 home, right? In order to be at the table to talk, depending on if you're going to be doing an FHA loan, a real estate investment, or a rental property investment, or if you're going to live in the house and house hack, whatever your strategy is, there's still a higher barrier to entry. So for a typical $100,000 home, you're going to have to put up at least 20%, if not 25% of the down payment. You need to pay for rehab costs. You need to pay for the closing costs, everything else, right? So it is a higher barrier to entry. Whereas with a real estate investment trust like Fundrise, which is a very popular one and one that I invest into, or investing into REITs on the stock market, which are publicly traded companies, the barrier to entry is maybe like $50. For Fundrise, I believe you need to have a $500 minimum account balance in order to invest with them. But with REITs, traded on the stock exchange, you can invest with something like $50 into, let's say, an apartment REIT, which invests in, which has a portfolio maybe of 20, 30 apartment complexes with $50, right? And you'll get a nice dividend yield from that, right? So the barriers to entry are very different between REITs and rental properties. So let's look at number two. Are you an active investor or a passive investor, right? With an active investor, if you're investing into physical real estate and you're doing it all yourself, you're going to be dealing with the tenants, the trash, the toilets. You're going to be dealing with the insurance, paying all the other taxes. You're going to have to be more active in that investment. Whereas if you invest into a REIT, you just put your money in there, you accept the risk that the company is taking on, and you're going to be paid a dividend from all the rental income that the REITs produce, or that the REITs take in, right? And you'll be paid like either, a 2% dividend, a 5% dividend, or, if you're taking a huge risk, maybe even a 7 or 8% dividend from a REIT, right? So for every like $100, you'll get like $8 annually, right? So, what are you? Are you an active investor or a passive investor? You have to kind of think of this. Also with a REIT, you're not worrying about the tenants, the trash, or the toilets, right? You just put your money in there, you let it grow over time, and you let the market kind of dictate its price, and, it'll either go up or it'll go down, whatever. So it's, some REITs are typically volatile or more volatile than others, but they're, generally a less volatile industry as compared to stocks or the equities like, Apple, Facebook, Google. Whenever they do a zig, REITs typically do a zag. So just something to think about. So the other thing is liquidity. Okay, what I mean by liquidity is, do you need this cash immediately, right? Is it liquid? If you invest into a real asset like a rental property, the money is tied up. You can't just it's not like a stock where you just sell out of it the next day and get your cash. When you buy rental property, the money is tied up. It's tied up in that asset until you go to sell it, or until, you refinance it to pull it out or whatever, right? So your money is not liquid in a rental property asset. The same thing with Fundrise. If you're investing in Fundrise, even though it is a REIT, it is a non-traded REIT. Right? So what that means is if you invest money into Fundrise, you're investing for the long term, 5, 10 years, whatever, right? Your money is not readily available. You can't just withdraw it. All right. And if you do, I believe Fundrise has some penalties and fees with that. Now let's take a look at REITs. If you're buying REITs on a public exchange, if you're using your brokerage, like through Fidelity, Vanguard, M1 Finance, Robinhood, and you're buying these REITs, if you put $100 into a company, into a stock, you can sell that stock the next day and get your money out. So your money is very liquid in the stock market, whereas in physical assets, your money's tied up. All right, so that's just something to consider. The last thing, putting it all together, creating a portfolio, creating an investment strategy. What is your strategy? It doesn't have to be one or the other. It's all dependent on kind of where you're at, how much money you have to invest, or are you saving up for this or for that? You gotta have to do you have to plan your investment strategy. One is not better than the other. There's pros and cons to both. I invest in both because I like both. I want exposure to apartment complexes, to commercial real estate, to data centers. So I invest in REITs, and then I invest in my own physical rental properties. Right now I have 3 rental properties that are producing cash flow in the form of rents. With my REIT portfolio, it's producing cash flow in the form of dividends, but it's not as high as my rental properties, but I'm not worrying about trash tenant toilets and all the little things that go with rental property investing. Whereas with REITs, I just put the money in, it grows over time, and I'm just collecting a paycheck. But with REITs, I don't get tax benefits. I actually take I get a huge tax burden because the dividend income is considered ordinary income. So, you're going to be taxed at your normal tax rate, depending on your tax bracket. All right. So these are just some things to consider. I know there's a lot of information. I'll put a couple links down below in the description to a blog post that I wrote about, kind of talking about the difference between the two and everything else. And again, there is no right or wrong. You just have to kind of decide what makes the most sense for you, for your investment strategy, and how you plan to build long-term wealth. All right. So I hope you enjoyed this video. I hope I provided some value to you. Like I said, I invest in both. I have 3 rental properties. I invest in Fundrise, and I invest in a portfolio of REITs. I'll put the links down below in the description to all my investments, so you can see my M1 Finance portfolio of REITs. You could see my, I don't know if you can see my Fundrise account, but I'll post a link anyways. And you can see a video of my rental properties. Hope you like this. Hit the like or hit the dislike. Subscribe, don't subscribe. Let me know what you think in the comments below. Thanks for watching.